All right, welcome to the weekly prep video for the week of September 22nd to the 26th. In this video, I'll be taking a look at the action over the last week of the indexes, liquid leaders, industry ETFs, then end the video with long and short setups going into next week, like we do with every weekly prep video. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Getting into the NASDAQ, awesome week, up 2.16%, three gap ups, a gap up on Friday, close at a new all-time high on big volume. Could not have asked for better price action after that gap down on September 2nd under the 50-day moving average. From there, we have gone straight up. We are obviously in the acceleration portion of this trend, which usually ends with acceleration on the other side. But a really easy way to play this is as long as the NASDAQ or whatever stock that you want to trade is above the rising 5-day moving average, likely momentum is going to continue to the upside. After we break that 5-day on a big push in volume, then we could start getting defensive. Then we could start looking for shorts, all that good stuff to play the other side of this trend. But until then, you want to be cautious. You want to stay on the side of momentum because the last couple days of an acceleration move can really make your trading or kind of break it if you try to get short too early, try to put on too much exposure a little too soon, or sorry, a little too late. Getting into the S&P 500, similar action, not as strong as the NASDAQ on Friday, just because we had a lot of speculation and tech names really go on Friday. Finished up 0.2%, up 1% for the week, and a new all-time high closing price. IWO, which is the growth stocks of the Russell 2000. Thursday, the Russell 2000 made a new all-time high. IWO is getting there. There's still some like higher prices from 2021, February 2021, so we're not exactly there just yet, but we are getting there. On Friday, we opened on the high of the day, closed on the low of the day. Still uptick in volume overall, but we've got plenty of air to the 5-day moving average. Again, until you close under the 5-day, there's really not much to worry about. ARKK, awesome breakout after this 5 or 6 week consolidation into that 50-day moving average. Had kind of like a false start move on September 10th, and then just has been ripping higher since that little shakeout day. Another gap up on Friday, close up 2.2%, up 8.2% for the week. Awesome price action. Taking a look at IBIT, higher highs, higher lows overall this past week. Little pullback on Friday into the 50-day moving average, but exactly what you would want to see after the false breakout on August 13th of Bitcoin. Pulled all the way back into kind of like a breakout retest of this double bottom base. And instead of accelerating to the downside, we found support there, built some higher highs, some higher lows, and has been trending higher since. Next, we'll take a look at the 9 liquid leaders. We'll sort this by price percent change this week so we can get a real grasp of what's been going on. And to no one's surprise, OKLO, just incredible price action this week, up 63%, up 29% on Friday. This is a stock that we bought in the Discord on 9/9. We had this great shakeout of the 50-day moving average. Well, first of all, this was in a leading theme, right? NLR, the nuclear theme, has been a monster mover this past year. We had a little consolidation, shakeout of the 50-day, first time pulling into the 50-day, undercut and rally of a support gap. We found that we have evidence that buying pressure comes in and supports the price action. Then we get a higher low shakeout of the 50-day moving average, followed by a dead volume day and very, very tight price action on September 8th. We had the shakeout, dead volume day, and then through that day's high, September 8th high, that was the buy point. And since then, it's been a dream trade. I've sold a third into strength, a third into strength, and then cut even more into strength on Friday. Awesome trade. And all the nuclear stocks, LEU, SMR got going again. What was the other one? NNE really started ripping higher. So when you align that theme and a stock with high ADR after a shakeout in dead volume day in a market that we're in right now, good things can happen. Definitely extended in the short term. Not trying to buy any more up here. The volume that we got on Friday is a little suspicious because it's one of the higher volume days overall, and it's while we're already extended. So we'll see how much more room that has. Next, BE up 26% on the week, continues to just ride that 5-day moving average into the accelerated moving move higher. We haven't seen overwhelming volume just yet, like we tend to see with a blow off top. So maybe that's coming, or maybe we just consolidate here for a next leg higher. My guess is we'll tend to see like that big volume come in, one final big extension, probably over $100, and then that'll mark the top. APP, another new all-time high, up 4.5% on Friday, 11.6% on the week. Has just gone straight up since being included into the S&P 500. So awesome price action there. ALAB, a little bit of weakness on Friday. Shakeout of the 10-day moving average and support gap, which is usually a pretty good spot to manage risk against. Down 2.7% on Friday, but still closed over the 5-day moving average. Still up 6.9% for the week. You know it's a very strong market when you look at a chart and you're like, oh, why was that down for one day? Next, we have Google up 5.8% for the week, new all-time high close. Another name that's basically gone straight up after they didn't have to sell Google Chrome. That was announced September 3rd. Alibaba, the liquid leader in China. We'll cover this with the ETFs, but Chinese equities have broken out of a 3.5 year base. That typically does not happen at the end of moves, but at the beginning of moves. So as US stocks get extended, my focus will be on picking up more and more Chinese equity exposure. CRDO, another semiconductor, made a new all-time high on Thursday. Little pullback in the 5-day and support gap on Friday, down 1.6%. Still finished the week up 4.7%. CLS up 4.6% for the week, basically just going sideways after that gap up on September 5th. Extremely healthy action, even though we're in a very strong market. Stocks that are consolidating after big moves are just the stocks that I look to trade next. And then Reddit, a lot of volatility this week, and I don't love the price action. Kind of a failed move higher on Thursday, followed through to the downside on Friday, but we did have the undercut and reclaim of the support gap of the 10-day moving average and then closed right at the 5-day. So down 2.3% on Friday, still up 4% for the week. And every single leader was up this week. The worst leading stock was up 4% this week. Just an incredible market that we're in right now. Getting into the industry ETFs, we'll also sort this by price percent change this week. And then because it's the weekend video, we'll go through every single one. Not every single one I really pay too much attention to, so I'll keep it short on those. But first off, NLR, this is nuclear and uranium ETF, so two kind of emerging themes. Picture, picture perfect price action. You had a double bottom base shakeout, higher low shakeout of the 20-day, another higher low shakeout of the 20-day, and then we really got a ton of volume on September 15th on that breakout, little pullback into the 5-day, and then expansion Thursday, expansion Friday. Definitely getting a little extended in the short term, but no reason to think that this can't go higher. Up 12.3% for the week, up 5.4% on Friday. XME, this is metal and mining, new all-time high on Friday. Just incredible trending price action until we break the 10-day. Like we've found support at the 10-day every time we pull back. So until we close under the 10-day, the trend is higher on that. MSOS, this is the marijuana ETF. I did start a position on this on Thursday through kind of that pivot. I really like the price action on this overall, and it's kind of a theme that I'll be focusing on as everything else is really extended. This is kind of not dependent on the market, so kind of a good place to get exposure, take some profits from extended names, rotate into something that's not extended. This has rallied from $2 up to $6, but the 200-day was still in a downtrend. Now it's going flat. So you expect more volatility in names that you don't have the 200 in a clean uptrend just yet. So the pullback from 6 to 4, while was pretty violent, it's like a, what is that, 33% pullback. Overall, in the price structure, completely fine. You should expect that type of volatility. You shouldn't try to be buying up here after a move like that. Now that we've had kind of the low put in, rally day, dead volume day, kind of like OKLO. Not exactly the same setup, but from those dead volume days, from those contraction days comes expansion. We got that on Thursday. And then on Friday, we had some weakness at the beginning of the day, but right at the end of the day, there was a big tick up in volume and strong close. And overall, this was just a consolidation day on low volume, like where everyone else's eyes were on momentum names, as they should be. This isn't doing anything wrong, consolidating under that 20-day EMA. IGV software ETF, back-to-back gap ups Thursday and Friday, new all-time highs, very strong price action there. Blockchain ETF and kind of like data center names, they kind of got away from like crypto mining and into data centers. Up 4.4% on the week, basically a flat day on Friday, trending over that 5-day moving average just beautifully. GDX gold miners, incredible strength here. Not a great sign for inflation and for the dollar, but you have to trade price. Haven't even tested the 20-day EMA on any pullback. We had a quick pullback to the 10-day, but even on those, we closed higher than the open, showing buying support at those levels, and then just gap up and huge extension on Friday on a pickup in volume. Until you close under the 5-day and under the 10-day, I think this is a trend that will continue. Semiconductors, big gap up on Thursday, up 3.8%. Very quiet day on Friday. Not doing anything wrong here after making new all-time highs. Solar stocks, TAN, higher highs on Thursday with the shakeout of the 10-day, strong close on Friday. A good example of why you should expect a lot of volatility if the 200-day is flat or flattening. We've had awesome price action. Like if you just like look at the closing price each week for solar stocks, but if you're actually trying to participate in the rally and find low risk entry points, there's a lot of volatility in this chart. And until we get like, what is it? ENPH over the 50-day moving average and that 50-day moving average trending higher, I think it's going to be a lot of choppy trading overall. But I do think price action will get cleaner as more and more solar stocks get into their stage two uptrends. KWEB, this is the Chinese internet ETF. I say this every video, but it's just a picture perfect base. 3.5 years, putting in a low, going sideways, getting ignored, and we just broke out of that 3.5 year base last week on big volume. This week we had follow through up another 2.7% on an uptick in volume. A pullback to the kind of the top part of this base, right around $39-40 would be extremely healthy. And at that point, I would be looking to really size into some Chinese equity stocks because you don't typically break out of a 3.5 year base and then just fail. FDN, this is the internet ETF. A lot of US companies, new all time high, back to back gap ups Thursday and Friday. Cybersecurity, new all time highs on Thursday, tight price action on Friday, or strong close at least on Friday, just below all time highs. Robotics ETF, new all time high or new 52-week highs on Friday. ITA, this is defense and aerospace names, new all-time highs on Friday. Nice little test of the support gap above the 20-day on September 17th, and basically been going up since then. Biotech ETF, a little bit of weakness on Friday after the uppercut and fail of the resistance gap. Another theme that the 200-day is just getting flat at this point, so you have to expect a little bit more volatility if you're in this name, like I am. I have a position in LABU. I'm just trying to let that work. We bought that down here through the breakout on August 12th. So just trying to let that work. Expect a little bit more volatility, trim some into extensions so it can sit through. XLY, consumer discretionary ETF, new all-time highs earlier in the week, and then just sideways action, not doing anything wrong there. XRT, the retail ETF, made new highs on Wednesday, inside day on Thursday. Little bit of weakness on Friday, but on below average volume, closing over the 10-day moving average still. So even pulling into the 20-day, I think would be fine there. IYZ, telecommunications ETF, chopping right at all-time highs. IYT, transportation ETF, closed over a little resistance gap zone on Friday, so good price action overall. And a theme that's kind of not extended here. So if we don't just kind of top out with that accelerated move in the market and instead kind of pull back on the indexes, see rotation elsewhere in the market, Transportation stocks could be the next one to go. XLF, financial ETF, just chopping at highs, not doing anything wrong. XLE, a little bit of weakness on Friday with the gap down, closed into that 20-day EMA on the support gap undercut. Another theme that the 200-day is still declining, so there's going to be a lot of volatility as it builds higher lows in this base. But as it's doing that, take a look at the leading stocks in the group that are starting to make new 52-week highs, because once we see rotation away from tech, the money's going to flow somewhere. My guess is XLE is the next group to focus on. PEJ consolidating at all-time highs. We do have that resistance gap that I would like to get through sooner than later, but as long as we're over the 10-day and the support gap, not doing anything wrong. XLV, this is the healthcare ETF, another group where the 200-day is in a downtrend, so we have to expect a lot of volatility. We have the first test of the 200-day on September 11th. From there, pulled back into the 20-day moving average and just consolidated this week. Even if we pull all the way back to the support gap at 136, I think this is in the stage one base, so it's not even in a stage two uptrend just yet. So expect a lot of volatility. XLB, materials ETF. I don't spend a lot of time on this, but it's over the 50-day moving average. It's over the 200-day moving average. Fine looking chart. XLP, consumer staples, very weak and really looks like it's about to have a base breakdown. You have your stage two uptrend at the beginning of, or kind of mid part of 2023 into 2024 and 2025. And now this looks like it's ready to break into a stage four decline. So if you're looking for stocks to short, jump into XLP, take a look at their holdings, see what stocks are in stage four declines. Those are the names to focus on. Then finally, ITB, Home Builders ETF. I'm actually a little shocked of the weakness because we did have that rate cut on Wednesday. That was expected, but down 4.3%, lost the 20-day moving average, followed through on Friday on big volume. We really need to see like a gap up on Monday. Otherwise, a 50-day moving average support gap test is probably in the cards. And again, 200-day moving average is downward sloping, so we don't want to be buying things extended when the 200-day is flat or flattening. We want to buy on pullbacks. So spot that I would watch is that 50-day moving average and support gap as kind of a shakeout area. Before we get into the long and the short setups, do want to go over positioning. So first off, we have the NAAIM Active Investors Exposure Index. Usually once this is over 95%, that's when pivots tend to fail. That's when uptrends come under pressure. And we got the update this week and exposure actually dropped. So this is as of Wednesday's close. So FOMC was Wednesday. Positioning as of Wednesday's close dropped from 86% to 84%. So it does not take into consideration all the momentum names that we had on Thursday and Friday, but at least on Wednesday's close, exposure dropped and was not over that 95% threshold. That's the type of recipe that you would need for a true like FOMO type blow off top in the market. And the commitment of traders data, which we'll go over now, also is kind of indicating that we're going to get that blow off top, that final big push in the market, that accelerated move before we get the large pullback. So taking a look at the NASDAQ, and I just look at the red line here, and whatever the opposite of the red line is where the speculators are. So with the NASDAQ, we saw speculators extremely long back in August, and that makes sense. In August, we had all that volatility until we had kind of the end of August, and we saw positioning unwind a little bit. Then we saw positioning tick up the prior week and actually got less extended, less overbought. This is as of Tuesday's close. So NAIM is as of Wednesday's close. COT data, commitment of traders, is as of Tuesday's close. But still, we saw positioning unwind a little bit, which is exactly what you want to see for a big final push higher. Let's go to the S&P 500 next, and similar price action. Uh, they're actually, or similar positioning, they're actually short the S&P 500. Like Speculators are short the S&P 500 while we're at all-time highs. That is not a bearish combination. And that's why I think the market can continue higher. And then Russell 2000, they got even more short, the Russell 2000. As we got the rate cut, as we have speculative stocks breaking into new highs, ripping higher, they're getting more and more short. This is the perfect recipe for a true blow off top, and you want to be playing in those in markets like that where you have the momentum on your side as stocks are making new highs, as positioning is short or unwinding in the Nasdaq. This is the perfect recipe for a big move up. Unfortunately, it's also a perfect recipe for how you make tops. But those last days, weeks, until positioning finally capitulates and goes long, can be extremely, extremely profitable as long as you stay on the side of the momentum. Once momentum does break, you want to step aside because this isn't going to be like a 1 day pullback. It's going to be a true correction. I don't know if it's going to be the top of the market, probably not because of how well the rest of the market is working. But it's not going to be like a 1 day pullback when momentum does end. Use the 5 day moving average, very easy. The momentum will stay long as we're over the 5 day EMA. And then when we see a big volume reversal, a close under the 5 day, then you step aside and start to play some defense. Getting into the long setups, then we'll go most liquid to least liquid, starting with Robinhood. Great news when it was included in the S&P 500. That got priced in September 8th. That close, we had a little pullback in the 10 day, got supported, then gap up Thursday and Friday. Looking for a pullback into that HVC area, that 10 day moving average, and then managing our risk against the 20 day EMA. Open Door, lower volume day on Friday, even though it was a little bit weak, down 3.7%. I really expected Open Door to just like rocket higher on Friday, and it didn't do that, which is a little concerning to me, but maybe like everyone's eyes were on Open Door, so other things started to work. I think you could argue this as a long or short setup because we're in a momentum market, because of positioning still negative for Russell 2000 names. I think this probably has another leg up, and I would just be looking for a breakthrough $10 as the entry, stop at today's low, and play that momentum as long as it goes. Because this is a name that went from 52 cents to $10. Those are the names that have the ability to double again, especially in the market that we're in. That'll be like a main focus for me Monday. If it loses the 5 day moving average, closes below that on heavy volume, that's a warning sign. And we do have like a couple failures at this resistance gap. So I wouldn't be completely shocked if like everyone talks to their friends about how strong the market is over the weekend. We get a big push like on Monday or something, and then we reverse. But again, until we get a sign that momentum has broken, play it on the long side, and then we'll have plenty of opportunities to short on the other side once momentum breaks. NBIS, huge move up on September 9th of almost 50%, pulled into the 5 day moving average as it digested a secondary offering. Then we had strength on Friday of 5.5% back over that HVC, the high volume close level. Just looking for a pullback into that HVC to play versus today's low or Friday's low. CLS, we talked about this on the leaders, a bunch of lower wicks at the 10 day. Now just looking for a breakthrough Friday's high as potential entry. Stop, I would be using like the low of whatever the day is because again, these momentum bursts, like names should work right away as if you're buying on strength. If they don't and they start to reverse, stocks will have like pretty rough corrections in the future. Don't want to stick around. No reason to stick around. Play the momentum. Momentum dries up. Get out. TEM, this is hovering right at all-time highs. Continues not to be a stock to buy on strength, so we won't do that. Just look for an undercut and reclaim of the last 2 days' lows. Stop would be the 10 day moving average there. SATS, another name that I'm pretty focused on come Monday. Big move up from $15 up to $80, pulling into the 10 day moving average, digesting all those gains, some profit taking. But not on like massive volume and pretty ordinary pullback. Really tight price action the last couple days, just through Friday's high, stop at Friday's low would be the trade there. Next, we have Unity. This was probably more viable on Thursday. The gap down into the support gap, opened on the low, closed near the high of the day. So immediately that was bought back up. Then we got a tight price action day on Friday, just looking through Friday's high, through kind of the 52-week highs. And if you zoom out, this is also at kind of like a pretty interesting weekly spot as well. So this would be, again, a momentum kind of performance boosting trade. You're not trying to hold this for like a true position trade. Just play the momentum through today's high or Friday's high, stop at Friday's low. APLD, nice move off the lows here. I haven't updated this chart in a sec, but pull back into the support gap into the 10-day moving average would be the spot to watch right around 1876. Then I would use a 2 or 3% stop on that name. FUTU, I got stopped out of this this past week, but really not doing anything wrong. Consolidation day on Thursday and Friday, and strong close on Friday up 2.3%. This was, I think this is actually Singapore stock. Let me check. Hong Kong. Um, so international stock pulling into the 50-day moving average for the first time since it started its uptrend. Zooming out, it's just below all-time highs back from 2021. One of the first stocks to actually make that move. So first stock to pull back to the 50-day moving average is a spot that I want to be watching. Just through the two daily highs from Thursday and Friday is the buy point. Stop would be the 50-day moving average on that. AEO, American Eagle, we saw a lot of retail strength over the past week and then a little bit of weakness Thursday and Friday. Coming back into that high volume close into the 10-day moving average. This is exactly what Abercrombie and Fitch did during their like secondary gap up, pulled into the HVC, and then just started ripping. And I mean, we'll jump to that really quick. ANF back, I think it was 2022 when it happened. So we had the first gap up. 200-day was still sloping down, so you expect a lot of volatility. Secondary gap up, lost the HVC, pushed above it. Then we had our retest of the HVC right around $30. And then from that point, from 30 up to 190 is where it topped. I'm not saying AEO will do that in that manner, but after you have a big, massive volume earnings reaction up 37%, that's what triggered it for ANF. Now we have a retest of the HVC, the 10-day moving average. Right around there is buyable, and then use a 2 or 3% stop on that. AAOI, this is my main focus if we get weakness on Monday. So instead of if we continue and just accelerate into like the highs in the market, if we have a pullback in the market, then this support gap and almost the 20-day moving average at that point would be the buy point for me. Huge base here, not extended from any moving averages. The 200-day, the 50, the 20, the 10, all right on top of each other, and a very high ADR name. When it does get going, it can make very quick moves from $6 up to $43. Kind of reminds me of the Tesla base before that breakout. So I'm hoping we get one more pullback, another higher low here, kind of like a breakout retest. The only way I see that happening is if the market pulls back as well. But that 27-10 spot is going to be a key area to size up. Next, we have a couple other Chinese equity names. GDS, big base, big push on September 11th, up 15%. Another big push last Wednesday, up 7.5%. And then just look at this volume pattern. Big expansion on massive volume price wise, and then lower volume pullbacks. Big expansion price and volume wise, low volume pullback into the 5-day moving average. Just looking for a break over $40 as the entry here. The stop would be the low from the last 3 days. PIGR, another Chinese equity name, another name that you definitely don't want to be buying on strength. Just look at how many higher highs and higher lows this has had. But this is another higher low pullback into the 50-day moving average after the extension. Really good risk reward spot. Just through Friday's high, stop under the 50-day moving average is the play there. Then we got two more. PARR. This is an oil and gas name. So we talked about XLE potentially being the next group to get rotation after the tech stocks make their extended move and then start to pull back. If money doesn't just leave the market altogether, it'll probably rotate. And that next group is oil and gas names in my mind. So through Friday's high is buyable. Stop Friday's low, the 10-day EMA. Otherwise, if we get another pullback in oil and gas names, this 20-day EMA and gap zone right around 33.60 would be buyable with the stop at the 50-day moving average. And finally, the least liquid name, but very, very high ADR is FUBO TV. Started off this year with a huge, huge move up 260% on just incredible volume. Since then, it's just been basing out, very similar to some of the quantum names. It's not a quantum name, so it doesn't have that theme behind it, but big move up, base all year, and then you get that huge breakout. Big move up, base all year, then you get that huge breakout. Fubo, big move up, base all year. We're in the right market for it. I'm just looking for a gap up opening range break, maybe even through like 450 would be viable. Stop would be whatever the low of the day is. This is a pure momentum mover, pure performance boosting trade, not a name to just like hold forever. Getting into the short setups, where I think we'll probably have better risk reward than on the long side. It's tough to say because again, the last couple days, couple weeks of that accelerated move, momentum move can be unbelievable. So if we continue on for another week, it wouldn't surprise me given where positioning is, where stocks are acting, or how stocks are acting right now. But the other side of that trade is going to be just as volatile. So be prepared, have a list of some shorts that you want to start to attack because when momentum does break, we're going to get a lot of great opportunities on the downside. First off is MSTR has been just very weak this entire almost this entire year from July. Topped, lost the 200-day moving average, undercut the support gap to the penny on September 4th, and from there just lost the selling momentum. So after that, it made sense that you're going to get a snapback rally. Perfect uppercut and failure of the resistance gap of the 200-day moving average on Thursday when we had that big rotation into crypto names. Coinbase got back on my radar then. But uppercut and fail there. Friday inside day, while a lot of other names were working extremely well. Just looking for another uppercut and fail of that resistance gap right around that 358 area as a potential short. Then stop would be 2 or 3%. Just because we're just starting to see more rotation back into crypto. If this momentum continues in the market, like this probably has a move up to the 373 area, that 50-day moving average. So just see if you can get a nice, really tight risk reward spot and don't fight the trend if we continue to break out. Because chances are like this can rally all the way up to the 50-day and still be a higher low overall and then really start the stage four decline there. So don't take a loss at the 200-day and then get sour on the short setup as it rallies back into the 50-day. RKLB, one of the previous leaders, massive move from like $2 up to $56. We've seen a lot of stocks gap down on secondary offerings, but they gap down, absorb that action, and then rip higher. That still could happen for Rocket Lab, but we haven't seen it. So we don't have evidence of that just yet. We had a secondary on September 16th, gap down, and then sold off down 12.5%, and then just chopped at the 20-day EMA since then. Looking for a break under today's or Friday's low as the entry, stop at Friday's high for the short there. PE, the best stock in the market in my eyes, from 16 up to $85. Still think that this has another day where you just get crazy, crazy price action, see overwhelming volume. I really want to see the highest volume ever in that move before I try to like aggressively short it. Because if you look back at MSTR and its blow off top, we had highest volume ever, then highest volume ever, back to back to back before, or back to back before like the true short. This was the best trading day of my career. So I want to like be patient for that type of move, that type of volume action before I try to short this name. We're not there yet. We've seen elevated volume as we get extended, but we haven't seen the blow off top just yet. Hopefully we can get that on Monday. Send this over $100. Just incredible. Like you want to see price action that makes you feel dumb before you short it. So we're not there just yet. Of course, this could top with just a gap down on Monday and then like a loss of the VWAP. You could short it then, but I won't really hit it with size until we get that highest volume ever, huge ignite bar, and then a gap up the next day. Next, we have EAT, and actually a lot of food stocks have been very weak. We've covered SFM on the short watch list for multiple weeks and months as it put in the stage three top, then broke into the stage four decline. That has lost from 180 to 120, so about 33%. Beautiful stage two uptrend, stage three top, stage four downtrend. A lot of the food stocks are now entering stage four declines, which who needs food if you have data centers? But if you're looking to short, some food stocks are probably the theme to focus on. This did just come into a support gap, so I don't want to be shorting it as it's already extended. Wait for a rally back up into the gap zone at 144. At that point, the 10-day moving average would catch up. That's the spot I've got alerts at for a potential short. BSAT, back-to-back highest volume or back-to-back high tight flags that have broken out. Now we got some pretty ugly action on Thursday with a gap up, open on the high, close near the low, and then tight price action at the 20-day EMA with a close below it again. This, I'm just looking for a breakthrough Friday's low as the short, stop at Friday's high, the 10-day moving average. A name that's moved from $8 up to $32 could start to unwind, pull back to probably like the 50-day. NEGG, this was, like I said, long or short, kind of coming into Friday because we had the massive extension down from 130 to $30 in like 6 or 7 trading days. Then we put in a higher low, got tight, started to push out on Wednesday, consolidation day on Thursday, expansion bar on Friday, into that 50-day moving average. I'll be looking for another rally into $60, this little gap zone, $60, $61. Uppercut and fail at that area. That would be the short versus the high of the day. This is another name that it's already made its big move up. It's already made a big move down. Kind of like BMNR, SBET. A lot of these names, after their big moves down, they have a snapback rally because it gets so extended to the downside. And then they're really good secondary shorts, probably even better than the initial short at those prices. DFDV, a name that's just been extremely weak, lower highs all the way down. Another uppercut and fail of the 50-day moving average on Thursday, gap down on Friday. Just looking for a rally back into that gap zone, 1776, and then manage risk against the 50-day moving average. EVLV, a name that I still think like could have some upside, but anything that is coming back to the 20-day moving average that you would think would be making new highs is suspect to me. And this big move that we had on September 12th, it came on lower volume than the previous day. So pretty weird that we got that price action on low volume. And then we followed it up with just an immediate check back into the 20-day EMA. Through Friday's low is the entry, stop at Friday's high on that short. And then last we have ZEPP. I think this could go either way, kind of similar to open doors trade. First time pulling into the 20-day moving average after a move from $2 up to $50. Lots of churning here, but not a ton of volume, which makes me think it probably does have another leg higher before it tops out. Not a name that I want to short on strength. I only want to short this on weakness because I want to short it as momentum breaks. I want proof that momentum has broken. So through Thursday's low, through the 20-day EMA, through $45 is the short. But if you want to say, hey, through $50 and this starts to rip again, trade it to the long side until momentum's gone. I think through 50 is buyable. Stop at whatever the low of the day is. And this is a name that has proven it can make incredible moves. We're in a market that is giving incredible moves until that momentum's gone. um, just be careful. If you want to play it on the long side, I think that's a perfectly good long setup as well. So that's going to be the weekly prep video for the week of September 22nd to the 25th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading week or throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great weekend, and I'll see you guys on Monday's video. Take care.